All right, folks, welcome to Market Trends. I am David Russell, VP of Market Intelligence here at TradeStation. It's great to be with everyone. As usual, if you want to go to tradestation.com and go to Research Insights, we have a rundown with a link to materials for you in this webinar that we're going to be using. And it was this blog post right here. Tried doing something on energy earlier, if you looked earlier, but it's just some things are happening in that area that really are pretty kind of stunning. Let me just quickly just go through these disclosures. It's pretty incredible to think about, for the first time, probably, in a real way since the early 80s, the Fed funds is above CPI. And, we're entering a period now of positive interest rates in terms of, after, real interest rates being positive. And, when you think if as we eventually emerge from this, that actually creates it could be a very positive environment for equities overall. Something that could last for, some time. All right, so if you're in this blog post, most of the materials I have is in this zip file, and then there's also this other one I did earlier in the month that is available here. It's a single ELD in there, and here's the basic chart that we are working off. So let me just kind of show you, because this is, to me, just pretty interesting. This is pretty similar. I took this chart. I've been kind of like evolving the different charts I use for this webinar in the kind of daily charts of the S&P. But what's interesting to me here is this was, I think, 6 straight days up. It was the longest, string of positive days in several, since late 2021. And, that's kind of interesting. I've also noticed that things like that often happen at the beginning of a move, not the end of, it can happen toward the end of a move. But when you see a streak like that, it can suggest like just a steady flow of money entering the market. So what's interesting to me is we have this high from right here, from last August. We also have a low post-Fed on the daily right there on that Fed day last week. There was a low, and we have the 8-day exponential moving average. So kind of holding right in that area. What's interesting to me is if we go over to the MTES chart, which you guys have in the zip file, this is just pure hourly, right, on the cash. This was the Fed meeting right here, this swing. And what's interesting is that we've just held it. And so there's that saying, never short a dull market, right? And that's really what we have here. We have a market that is really not doing very much. When you look at the pullback we've had in the last few days, the magnitude of it has been very minor. We've pulled back, a few percent, and that's 3 days down, and not much of a percentage decline. Tells me in many ways that there's not a huge amount of sellers, and in many ways this is the underlying operative assumption that I've had for a few months now, and that is that pullbacks will be shallow in an environment like this. And I continue to look back, and I believe that a good model is 1995. The soft landing, we can go back and look here. And I also added RSI to this because it's kind of interesting. Where's 95? The breakout of 95. You say, oh, RSI is overbought. Oh, no. Well, look what happened. This is February of 95. RSI was overbought. After this thing broke out, it barely went. Now, right here, this is a Keltner channel. That's the 20-day simple moving average, and there's the 8-day exponential. It really barely ever went under its 20-day simple moving average for 6 to 8 months. So the reason I focus on this is because when you look at the period of sideways movement that we've had here, in the last 18 months. This was basically the bear market. Well, I don't call it a bear market. It was not technically a bear market of 1994. We basically, if you look at, there was a high, you basically had this pullback. Here it is. All right. So this is a high at the very beginning of 94, and then it just chopped sideways. And then when it started moving, this was the breakout to new highs right there, pulled back and held in March of 95 versus January of 94. This is, and then this is when we saw the bull run of the 1990s. And so that was the same thing. The Fed paused. I mean, there's so many similarities. It was a soft landing and all that. So I think that, we have not yet cleared the old highs, but the thing is that there's a lot of similarities in the movement here. And I think the most important thing, like I've said, is the tightness. It's important to understand the underlying tightness of this price action. When you look at, there's been a lot of different people have talked about cash on the sidelines and just a lot of other things that I've talked about a lot. And I just want to point out, this is exactly the sort of thing I was talking about. Pull back to the 8-day exponential, in my view, hold above this high here from August of last year. The next targets, we could be looking at, there was a vicious reversal back on April 21st of 2022. And then there was also, this is like a big ABC down. This was back when the bear market was starting. It tried to rally after the Fed. This was a Fed meeting in March. Be like, oh, thank God the Fed's only going to raise 25 basis points. And then it was just boom. This was a big ABC down. It was like A, B, C. And this was a vicious reversal right here. And we are now, that level is a high of around 45.13. That to me was one that people might be looking toward. And then we have the March high of last year. So that's what I have on this chart. And you can see these lines are drawn out here in the same sort of levels. But I want to just kind of point this out because this is the kind of thing that it just looks to me like it's taking shape. And there's just a very, just a tightness to this price action. And when you hit a new 52-week high and you don't pull back much, to me, I think as long as the S&P stays above this high here, to me, that's kind of going to be the playbook that I have. So I wanted to just kind of highlight that. Now we look at this is like I said, this is a series of charts I've been working on, and I keep changing it, which is why I don't share it with you. I'm not really sure exactly what I want to focus on with this. I have a series of different indicators that I can bring up to do the charts like that I put in the actual blog post. Most of these are things that I have derived from other things I already given you guys. So if you look here at my, this is my S&P hourly that you do have. This is the ES. Now this is, we've talked about how this has 3 signals, kind of 4 signals, depending on exactly how you look at it. This is the hourly, the ES. It only works on ES, but there's 3 signals: MACD, the 50-hour direction, 50-hour moving average direction, and the stochastic. So if stochastic is oversold, that is a quote bullish condition. If MACD is rising, that's a quote bullish condition, and the 50 moving average is the direction of that. So this red line down here, it goes between green and red when the 50-hour moving average changes direction. So to me, that's the average of the change. Just so you know. So it might be essentially neutral like this when it doesn't really. See right here, for example, the 50-hour basically went flat. This histogram went flat, but the line remained positive because it was the average of the 10 preceding bars. So basically, this is telling us here that what was interesting here is that it essentially went to overbought and was oversold, was coming back from oversold, and then MACD turned higher. So this is a little bit more of a bullish signal. The other thing on here that was, to me, the more bullish thing today was the outside candle, a bullish outside candle. To me, the outside candle is, reversal signal on either side. It's not like the most super useful thing, but when you see it happening at a level, like up here, we had a false breakout, bearish outside candle, and then a reversal downward. You know, and here we are toward the bottom of the range. You see a bullish outside candle. To me, when you're in a range and you get those outside candles, it just kind of helps validate to say that the you know the range is intact. And you know, when this pulled back to here, and what's interesting is, you know, this was basically the low after the Fed. This was the Friday after the Thursday after the Fed when we spoke last, and it tried to be red in that morning, and then it just ripped higher. So to me, these are the kind of important levels, and seeing that reversal candle there, this is kind of the signal. So this is one of the charts I've given you guys that I find, you know, somewhat useful. And the other thing I'll just add is that if we go to my MT main, well, I don't know if I have this here. Sometimes I look at the 10-day simple moving average. All right, let's look here. This is the MT swing workspace. The 8-day exponential, the 10-day simple. I mean, I personally like the 10-day simple more, but I don't know anyone else who uses it. So I mean, it's pretty similar to the 8-day exponential. But what's interesting is this was the first pullback to the 10-day, really, since we broke out to new highs. I have an adage that's just buy the first pullback to the 10-day when a rally starts. And I don't know. I mean, I've just found that it sometimes can be, you know, it can be useful. So I want to just kind of point that out. The 10-day simple here is the yellow line on this chart, and it is this was the first pullback to it. So to me here, that's kind of the working assumption I'm working with, is that we're in the midst of a tight uptrend, and that as long as we remain above that high from last August, there's, you know, likely to be kind of continuation of the buying. Well, it's just kind of a smooth sort of trend following. The other thing I think it's important to realize, some of the other points we have here, is that you know, the volatility just continues to collapse. And we're actually in the midst right now of an inside week. So this is a weekly chart here. This is my MT swing workspace. It has weekly, daily, and then 2 intraday, which is why I have the different coloration. But this is an inside week. So I mean, that's not a reversal pattern. You know, inside weeks are never reversal patterns. They are continuation patterns after a move. So I think that's just kind of, you know, interesting. And if an inside week is a reversal pattern, I've never seen it. Maybe someone does have that method, but usually what you see is when you have a move and then you have you're inside of it, you hold it, but you don't reverse it. It just shows that there's no real conviction of unloading or reversing the move. That's the reason why an inside candle can often just mean that after a big move, you don't get much of a pullback. You don't give back the move, and that's what's important. There's something else which, well, I mean, we're just under 50% of this candle, which I'm debating how much I care about that, but I wanted to just kind of point that out as well. If you actually look at that candle last week. So look at some of the other points I have here I think are kind of important. I highlighted these levels. What's interesting is, I'll be honest, when I started this, I really was expecting more of this kind of shift to the cyclicals. And it hasn't. I mean, today that just completely came apart. So we'll go to the MT main workspace. We can look at the key ETFs here. And there was a little bit of a bias toward the small caps, and that just basically just disappeared today. Things like the industrials and the you know, energy had tried to rally. What's interesting here is energy has so many reasons that it should, in theory, be going up when you look at the inventories. But I think that, you know, I find there's a lot of things that I'm right about or wrong about or whatever. What matters is that when you're right about something, you push that, and when you're wrong about something, you kind of abandon it. So what's interesting to me is that, you know, I'll be honest, this idea of this shift to the cyclicals, I'm going to abandon it because it doesn't seem to be playing out. But the one thing that I am right about, and I'm going to stick with it, is that China, I believe, is in a significant economic, you know, weakness that could lead to a deeper crisis. I'm not sure if it will be a deeper crisis, but I think that the bigger thing is is that China is no longer vacuuming up huge amounts of commodities, and that's really all that matters for us. It's a deflationary environment, weak currency, they're cutting interest rates, they are trying to jolt their economy back to life, see if it works. But the bigger thing is that energy, commodities, all those things are pretty weak. What's also interesting to me is, and this is a quick thing, and I was looking at this, when that dam blew up in Ukraine, I mean, it flooded a lot of I think important wheat production land. I don't know much about European agriculture, but I know that Ukraine was a big wheat exporter. So this is wheat, and we saw these big rallies here in this, and I do think it's kind of interesting. This is corn, but what could be interesting to me is if this was just a response to the dam, to the thing in Ukraine, that usually, things like that may not last. So I think it's important also to realize you get a knee-jerk reaction to news, but the fact is, if we are in a process here of commodities weakening, then in many ways this is the news that is not followed. It just gets faded, and I think that's what we have to watch for, because if that's what happens and we see these commodity rally and agricultural commodities fade, it's not that important to inflation anyway. But if you see oil cannot get a bid, if you see the commodities cannot come together, the Fed continues to push interest rates into more restrictive territory as inflation eases. We're setting up for an environment where when the interest rate policy goes in our favor, you're looking at a very positive environment for equities like we had coming out of the Paul Volcker years. And I think the thing at the end of the day is, people know that playbook. And I think that the market might be anticipating that now, which is why it's interesting to see technology can keep pushing higher, even with interest rates where it is. So I think it's just important to kind of realize that, is it, people know this playbook, and a lot of the inflationary evidence out there continues to go, softer. I think when you look at, especially the rents, when you look at things like, and I've talked about this last week, but if you look at the manufacturing reports, they have indexes that have been, remaining in a non-inflationary environment. So anyway, I think I think we also have to keep our eyes on housing. The data this week was really extremely positive on housing starts and things. A lot of the housing stuff has already, the ITB, the housing index, a lot of these home builders are kind of hitting highs. But so I wanted to show you guys very quickly, we do these ideas on TradingView, and I want to share this with you. Let me go to host and panelist. Sorry. All right. And you can see these ideas. If you click on the TradeStation logo, it'll show you the other one. But I wanted to kind of point this out because, housing has been, in an interesting sort of, environment here. It's been, aside from, technology, home builders have been the strongest part of the market. And a big member of that is Home Depot, and it hasn't done anything. So it's interesting to me here to watch it at this area. People might want to be kind of seeing, how Home Depot performs here. What's interesting about it is it has some areas here where, people looking for a breakout could be setting alerts and thinking about, areas around here to see if we get above this level around 305.5. It was this gap down level, gap down this day back here in February 21st. And, it's become resistance since. So it gives a potential area for people to watch if there is something of a kind of breakout through here. That was one thing I wanted to mention. It was also interesting that this is an interesting call from this analyst at Bank of America, Savita Subramanian. It's funny, Bank of America's got like 3 or 4 different people, and there's Sutmeyer, this what's his name, Steven Sutmeyer, and then there's also Mickey Hartnett. Sutmeyer has been bullish. Savita Subramanian's been bullish, and then Mickey Hartnett's been bearish. So they're like their 3 strategists I see. But he made just his argument of how we're going to see AI boosting industrial stocks and a lot of like non-tech stocks because it'll boost productivity. And she said the market is now more rational because it's looking out and seeing better times. And it's kind of what I was saying about when interest rates are restrictive in real terms. As that cloud lifts over time, it creates more of a structural positive for markets. kind of the opposite of what we had about 18 months ago. So Jerome Powell just kind of kept doing his hawkish commentary, and then interesting, Goldman Sachs raised its target as well. So there are other sort of factors out there in the background. So I wanted to just very quickly, it's interesting. I always like to highlight like a big mover of the week, and I want to mention there's this Argentine energy stock YPF. I don't know. What's interesting is there's a couple of these Latin American oil stocks that have been really moving, and even with with oil struggling. And this one is interesting to me, to see the sort of breakout like this. And it's interesting just to kind of be aware when some stocks are kind of lesser known breakouts. There's always your kind of some mid cap to lesser known large caps that kind of break out or do interesting things. And this was one that popped up for me, and I'm going to show you in a minute how we actually find those things. Because I think that's one of the things that's interesting to me here are some of the different things that are kind of popping up. And that's actually what I wanted to show you now. Let's actually first, so one other thing I want to mention about interest rates here. This is the weekly chart here of something like the 10-year treasury. And I've been watching this. This is a trading view chart, but basically I've been watching to see here, there's a series of lower highs here. And I'm kind of watching to see if this actually becomes, if this fades here and breaks lower, does this actually mark the top in interest rates? And, I think that right now we have what could be the beginning of a top in rates. However, at this point, we're not really seeing it be confirmed yet. I mean, it's interesting to see things like the 30-year, kind of making this lower high. It's still below where it was, last October, even with the Fed having hiked. What's interesting is this thing, the 30-year, what I find interesting about it is if you look back when this is the actual COVID lockdowns, it basically interest rates, things like the 2-year actually continued lower. And then if you actually look at the 30-year, it never went back as low as it was at that very bottom, at the very beginning of March 2020. So this actually, in my view, kind of gives a sense of where rates are going to be over the long term. Because the thing is if you're buying something for 30 years, you're not really going to be exactly as, concerned with what rates do in the next few, weeks to few months, like you would be when you're looking at, something like a 2-year, yield. It's interesting to me to see that the 30-year has not made higher highs, even with the Fed continuing to raise the short end of the curve. And to me, this tells me when you compare here, this kind of showed that rates were going higher. And here, this might actually tell us that we're kind of near the end of the road here. If you look on a monthly basis here, even from February, we're still below that high from February. So to me, this remains something that is an interesting sort of thing to watch. And I think this does tell us here that the market is still getting a sense here that we're pretty near the end of the road. The market is, getting more comfortable with the idea the Fed is going to be, done soon. And that's the belief. And if you look here at the CME Fed Watch tool, they're now looking at a single hike. The Fed basically put in their dot plot 2 hikes, and the market doesn't really believe it. So another thing that popped that was interesting to me was an article on CNBC from the Bureau of Labor Statistics, which actually said in May, real hourly earnings actually were positive for the first time in over 2 years. So again, it's one of these things where you get a lot of, it's like a scatter plot of information, and all the information, most of the information that we've been seeing has been falling toward the deflationary or non-inflationary, ballpark. That's where it's been landing. And we've been seeing stuff like the PMI data, the oil break, refusing to rally, all these different things, the information about the rents coming down. I've seen just more and more evidence rents are coming down. So all these things together still are pointing in that direction. And it's just a question of when will the Fed, when will it completely, materialize in Fed policy. But the bigger point is that the market sees it coming earlier. And that's one of the reasons I think why we are seeing this sort of tight uptrend. And it's also one of the reasons why I think you have to be careful of people who say, we need to get to the point when the Fed actually cuts, because the market's a forward-looking instrument. And, there was a period of time, many years ago, when the Fed did not give you dot plots, but now it's a lot easier to anticipate what the Fed is going to do. And so I want to just kind of, mention that the market is looking forward, and it seems to be anticipating this, better environment in terms of inflation. All right, now I wanted to actually look at some of the scans and things that were interesting. Well, I'll just right off the bat, I have like 2 workspaces going here, and just make sure I have another one because I kept some things over here on another. All right, so I'm going to show you some of the things that popped up that and then we'll show you the scans to create them. So basically, this was AI. Now, this is one of these stocks that has been, one of these, real kind of darlings of like, tech, and AI trades. And I don't know much about this company. It is maybe a little bit of a meme stock for people trading AI, but it has been, one of the names that has really been part of this trend. It's been in a significant sort of like, rally here. And what's interesting with me is I did a series of different scans that were basically looking for essentially 2 things: a recent 52-week high and a pullback of some kind. So in this case, we have a pullback to the 21-day exponential moving average, and we had a 52-week high recently. That's how we found that one. Now, another one, this is a company that was very interesting. If you look at that earnings report, Yext. Now, this is one of these companies that is, it's only about $1.5 billion market cap, but they have this thing that, creates, web page. It somehow like customizes websites based on AI. It's some kind of AI software, web design stuff, and, explosive quarterly results here, the explosive sort of rally. So you had that 52-week high, and then you have the pullback. So this was one where basically what I had scanned for was, I said, let me see 52-week highs in the last month, and it's down a lot in the last week. So I had the 2 different criteria: the high and then a negative value for the last 5 days. So Yext is one of them. Palantir. Now this is one that is much better known. Had it has that AI aspect to it. Had the sort of breakout, and again on this one, it had recently hit a 52-week high. I think I did these in the last 21 days, last essentially calendar month, because 21 trading sessions is roughly a month. And then it had pulled back in the last week, and it was also touching the 21-day exponential, which is the gold line here. So these are some that were popping up. Another one is Super Micro, SMCI. Now this thing is an AI. They make computers that power some kind of AI applications. So that's interesting. And wanted to just show that one. It had some really explosive. This was actually when we had actually highlighted as a mover of the week a few months ago. And then Mongo database. Now, this was one that we had talked about recently. We had talked about how things were holding the 8-day EMA last webinar. And just today, it's interesting how it just had this tight range. And what's interesting is we're seeing this pattern across the market, which is not a pullback. It's just like a sideways range and then continuation. If we look at the S&P here, basically look at what it did before it broke out. It had a sideways range and then continuation. So Mongo database, same thing. Now these are all these sort of companies. This one is what? It's this is a bigger. It's like 26 billion market cap. But you basically have a kind of, more of an upstart sort of up and coming company. It's it went public about, I think, around 2018. It's not in the S&P yet. I don't think it's in the NASDAQ 100. So it's one of these companies that is in that the sort of lower tier of like growth. But for people looking for the companies that, if you believe that we have a growth phase ahead of us, and you're looking for those companies that might, be, 3 to 4 year holds. If you're like a portfolio manager running like some kind of growth fund, and we as traders, we look for very often, where is the institutional money going? And these are the sort of names that could be on that list. And for me, Mongo Database is one of these names, because this has had several interesting sort of moves over time. Now, the next one that popped up also is Appian. It's another company that does software. I haven't looked at their results recently, but this was a different scan, where basically what happened was the 50-day simple moving average crossed over the red, which is the 10-day crossed over the 50, and then it had a pullback. And so actually we need to look on my other one, on this one, which is this. And what happened is it crossed under, it actually tested the 10-day yesterday, which is how it popped up on my list. So it tested the 10-day, and the white and the yellow line crossed over the red, which is a 10-day simple, had crossed over the 50 in the previous month or something, and then it pulled back. So I'm going to show you how to do these scans also. All right, really quick question. I'll tell you now. What are the 2-year note? We don't have the 2-year Treasury note. I got that. It is on TradingView, and it's on different places. I mean, I basically practically live on this website from the St. Louis Fed, the Fred. But if you type in Fred 2-year Treasury, right? I'm pretty sure you're gonna. That's how you find it. There's various places you can find this, but the St. Louis Fed has this great data tool, anyway, that's where you can get some of this information. So I mean, it's interesting if you actually look here, if you look back when when COVID was hitting, just really briefly here, you can see that this thing continued lower throughout late 2020 into early 21, when the 30-year was already moving higher. That's what I was talking about. All right, so these are just some of the ones that popped up. Another one, AEHR. This is a company that does semiconductor testing equipment of some kind. It's another relatively new company, and I think that's one of the things to realize here is that, and I've mentioned this many times on MarketTrends, I mean, this is not a downtrending stock. This is a growth company, and it popped up on my list because it made a new high, and then it pulled back to that 21-day exponential. That was the new 52-week high right there on June 9th, and then it had that pullback to the exponential. Oracle and Adobe also on my list, but these are names that had some interesting results. I'm not sure at this point. They had these big gaps higher, and these also are popping up. I think they're on the kind of watch list, but they have this sort of, if we are back in a growth environment, people forget. I mean, Oracle has broken out to new highs. We were talking about how this company is in the midst of a significant transformation. They bought Cerner, and they entered a part of the software market that honestly I think other people were just asleep, missing. I don't know how people missed, the growth in area in some of these healthcare names, in the healthcare vertical. You have basically non-secular growth, which is non-cyclical growth in in a lot of software IT. Cerner had struggled for years, and they just bought it, and now they're just really a transformative sort of acquisition over time for Oracle. And I think it's just interesting. This company, it's caught a lot of people asleep, and I think it's one, when you see things snapping to highs like this, should be kind of on the list. So I want to just point those out. For me, these still look relatively overbought, Oracle and Adobe, but these are the names that you keep on the list. So let's show how some of these scans, how we perform them. Let me see if I can actually. This is the crossover strategy we've shown you before, of the 8 of the companies above the 20 and 50-day moving average. It remains in a signal of not being negative, of being remaining long. That the entry was here. So you can see it had a series of positive entries. But let me actually now bring up Scanner. Let me think of an easy way to do this. The tricky thing for me is I use 2 workspaces now, and I have 2 different desktops on 2 different monitors. I'm going to bring in scanner here and show you how we're going to use scanner, because that's the last thing. If you go to the bottom of the rundown blog post, you can see where we, all right, let me see if I can just quickly, I think I'll just do empty. I just copy Windows and now I'll just throw it away when I'm done. All right, so see, now you'll notice these both have the cyan symbol linking. All right, that's what we got here. So whatever we click on the scanner will pop up on the other. All right, so if you go here to the bottom, this is what we're going to kind of go through right now. All right, so I already have this. I have a series of these scans created. I mean, I'll tell you, the one thing on TradeStation that is not my favorite is scanner is awesome, but man, it can be cumbersome to work with. So some of you do webinars, it's hard to find all the things. I have something called non-index runners. And that is what to me is kind of what I'm looking at now. Non-index runners. This is the one, and this is where I got Yext, for example. Look, Palantir popped up on this list. So this is basically what I'm working off, and I'm going to show you now how I would create it. So I'm going to just go to create scan, and I'm going to just give it today's date to start 2023-06-22, and then just call it, market trends. All right, now I have this set up by default. All right, so if you look here now, remember we're working off of this blog post, this situation here. So we're going to start off by including all stocks, but then we're going to exclude the NASDAQ 100 and the S&P 500. The idea is, I'm looking for that momentum growth stock that is not as well known. For example, the stocks that are making new highs that are, in that sort of situation that we were just discussing. So you go down here to the exclude section, and then you go to TradeStation symbol lists. And then you go to index components, and then you see there's the NASDAQ indexes. So we'll exclude the NASDAQ 100. And then we can also go down here and go to S&P indexes and exclude the S&P 500. Now it shows 504 members of the S&P, which is silly, but one reason is that Google is in there twice because Alphabet has two versions of Alphabet, and there's probably some other company. It might be Fox, the media company. But anyway, those are the stocks we're going to exclude. All right, now we'll go to next. Now I have this set always to include. I always want to see 1,000 market cap, because that's going to be $1 billion, and then average volume of at least 500,000 shares a day. So I always include that. I have it set as my default because it weeds out a bunch of random things that are not heavily traded. So these are the things. Now we're going to go to things that really matter. We're going to go to the price folder. This has a series of folders. So you go to price, and then we're going to go to percentage 52-week high, low, greater than 75. That means that it's going to be in the top quartile of its 52-week range. Profitability, I'm going to just include revenues. And the reason I do this is because whenever a bunch of stocks come up, I like to actually see, is it a real stock? Or is it a biotech stock that doesn't have any business? Or is it, a real company that has a lot of revenue? And it's good to know that, because you're going to find stuff. So you can use scanner in different ways as kind of these throwaway values that you can use just for context. So I'm now going to go to profitability revenues. And the reason you can do this is you can quickly see and know what you're looking at. When you see a company, and then you go to revenues, TTM, and let's just set it to greater than 100, which means it has at least 100 million of revenue. So if you're some biotech company that doesn't have any revenue, or here's the annoying thing, you'll get a biotech company that one year they had 500,000 of revenue, the next year they have 4 million because they got a milestone payment, and it looks like they have 800% revenue growth, but it's all just nonsense in terms of, it's real numbers, but it doesn't tell you anything if a company has that kind of revenue. So the thing is by doing this, we can see, is this a company that has a real commercialized business, or is it just some kind of speculative thing? Because you always get these biotech stocks that rally, and then they just die, and they look bullish on the rally, but then they just, so I like to avoid those because those are just you need to understand the biotechs themselves to do it, and it can be very difficult. Because we like to do stuff. I like to do stuff based on technicals. I'm not, a biotech analyst, and you got to really understand sometimes data and things of clinical data to understand those. So now we're going to go to days since 52-week high or low. This is an indicator. So indicator, scroll down to the bottom. Remember, indicators are different. And now this is going to be one of the custom indicators that I've given you guys from your zip files. And we're going to go to days since 52-week high low. Days since 52-week high low. You guys have this. And then we're going to say, make sure you're set to high there. You have two different outputs. You want to make sure you're on high. And then you're going to say less than. Oops. 21. I said 10 in this, so we'll do 10. You can do. I mean, I'd only do 21. For some reason, I did 10. So there's gonna be made a new high in the last 2 weeks, and then we're gonna go to indicator, and we say industry, which I like. Let me show you the reason why I do this, because it's another thing. You're able to, by doing this, you're actually able to just get a bunch of context on the company, and it. Sorry, I have a thing going off. Is not nothing, quote, quote. The last thing I'm going to add one more thing that's always good, and that's going to be price. And we're going to go to percent change. We're going to say here, percent change, open this up. I'm going to say 5-day, and let's just say, you can just say like, less than like 10 or something. So you're always going to find some stock that's up like 40% in the last week, and it might be interesting, but it's more interesting after it pulls back. So now we'll just hit run. Okay, so the next thing I'm going to show you guys is there's an indicator you have, and it's down here also in the MT main. And then if you go to MA tools, it's called MAX days since. Now this is like my favorite indicator I've ever created, because what it does is it tells you how many days since two moving averages crossed. So like, for example, if you look at, this is a random one, but VTRS, you can see the 8-day exponential rose above the 21-day 10 candles ago. So down here in this chart, look at the blue line versus the orange line, or the gold, right? And that it crossed there 10 days ago. So the thing is if you want to find things that recently had a crossover, and then if it's like a recent crossover, it has a threshold where it will highlight in white here. So if you actually go to the, you can actually, there's a highlight threshold. So if it happened in the last 2 days, it'll turn white, either a bullish or bearish cross. And then, so what's interesting about this is we can now say we want to see things that had a bullish cross in the last 2 weeks. We can just go right here. This is for the S&P 500 members. We can just go right here. We can then go to data, add label row. Then we can go up here and then say, because it'll have zeros too. So we'll just go here to we'll find the negatives. Here, let's just go here. Go to data, add blank row, or just make it a label row here real quick. Now we can go in this list, and now we can just kind of sort and see these are now names that have hit are sitting at the 8-day simple. So if we look at this, for example, AWK, some utility stock, but here's one now that had what would be considered a bullish crossover signal, and now it's holding that level. So I mean, I'm not saying this stock is necessarily anything, but the point is that these are the sort of ways you can find the short-term signal and the other signal. And that's the next scan we're going to do. So let's run back over to this workspace and see what it gave us. Hopefully it worked. Here we go. Mark this one. All right. These are our results. So what do we have here? Let's sort by market cap. The biggest first, Taiwan Semiconductor, TSM. So, I mean, these are the sort of charts that we're looking at, maybe if you're looking for pullbacks, these are the sort of charts that are potentially what people want to see. So what do we have here? We basically have, it made a 52-week high 5 days ago. And in this case, it's up less than 10% in the last week. We're sorting by market cap. But here, these are some of the sort of things that are potentially popping up on this list. So these are names that hit 52-week highs, and often when things hit 52-week highs, They kind of just have a tendency to just keep, plodding higher. A lot of these stocks I haven't looked at in a long time, but this is an example of the scan I wanted to kind of show you guys. Now, it's interesting that these companies, these are not in the big indexes, but some of them are relatively large companies. These are companies, we're looking at companies here that are market cap, above 10 billion. So you're looking at things that are, not small caps. I don't even know exactly that is now the definition of a small cap versus a mid cap. But 10 billion, we're looking at companies that are, interestingly sized. Here's another AI name. This is a company that does, it actually stands for IoT, Internet of Things. And this is an interesting sort of, another name. It's similar. It trades very similar to SMCI. I feel like a lot of people have these two kind of married to each other as sort of mid-cap AI up-and-comers. So anyway, these are just some things are potentially interesting here. Now, the other thing you can do is you can sort by who's pulled back the most in the last week, and then you can see these are stocks. So this name, Fastly, I mean, this used to be one of the big names during COVID. Hit a 52-week high and it's pulled back hard. So these are maybe some of the things that some people might be looking for. So SMCI, you can see where I got it. I mentioned it earlier. APLS is, what's also good about this is that you can see right off the bat what business it's in. So you can see, all right, here we have a software, we have, software, we have computer hardware, we have biotech. It's all right there, easy to look at and kind of see. So I want to, show you how to do that. Now, another thing that I've done, let me show you the crossover. Let me just go ahead and change this now. So we're going to now go to, I'm going to just disable this. Okay. And now what I'm going to do is I'm going to add, there's a little bit cumbersome. This is, I love it, but like I said, it's cumbersome sometimes to use scanner. We're going to go to MAX day since. And we're going to adjust it. So what I did was I did the 10 and the 50. You can do the 8 and 21. Just realize that you have to write exponential and you got to spell it right. So I'm going to just do 10 and 50, right? So 10, and I like the 10 and 50 as a simple for intermediate signals, intermediate term signals. I'm going to change this to simple. You have to use quotes. Wait a second. That's the wrong line. Simple. Make sure you use the quotes. Copy and paste. So I often just do that so I don't misspell. Sometimes you're like, oh, why is my scanner not working? And then you misspell the word. Okay. So this is going to look for things now that had the 10-day rising above the 50-day. And then we're going to say days since, we're going to say greater than 1. Okay. Now remember, if it's a bearish cross, it'll give you minus numbers. So if it crossed negative 5 days ago, the output will be -5. So in this case, we're going to say 1. And then we're going to do the same thing again. I'm going to indicator. And we're going to MAX days since. And then the 10 and the 50. And then we're going to say less than, say, 21. And the reason is, you'll find a lot of stocks where it's, you're not going to get this. We're looking for the recent crossover. So we're looking for stuff that has happened recently. This is why I save a ton of different scans, because I don't have to always be typing this out, but I want to show you guys how to create it. So this one we're going to say, let's say less than 21, which means it would have happened in the last calendar month. Okay. Okay. So we're going to look for stocks here that have crossed in the last calendar month. We're going to look for things that have pulled back. This will give us a 5-day. We can find the pullback with this, and everything else will leave the same. We took off the day since 52-week high, because a lot of these names would not have made a 52-week high. It could be the name coming off the low, for example. So that we're going to uncheck that, and now we're going to hit run. All right. So I'll just mention also, it's interesting to see what the strength we've recently seen in kind of cryptocurrencies. At this point, I wanted to just mention that because in some ways, I think it's kind of we've had a lot of regulatory fears about crypto, and the market sees things happening like BlackRock trying to push the crypto ETF and stuff like that. So I wanted to just mention that those things remain lingering in the background, and again, it's a situation that might be somewhat similar to the equity markets, where you have a lot of negativity that is already in the price action, and then when the negativity starts to turn, people see things potentially moving in a more favorable direction. S&P kind of pushing, still kind of pushing near the highs of the day, and like I said, it just it is refusing to kind of break lower here. And I'll tell you, the real indicator of this, the modestness of this pullback, has been the VIX all along. I'll also mention that this is a trading view idea we did earlier in the month, but I do believe that this can be a useful sort of view to have if you compare this to 1995. It's also, there was a channel, and I think there's a case to be made that the market moves in secular runs. This secular run before the 1970s started, I think, in 1948. And then basically it ended, kind of in 1968. You had a long bear market here for various reasons. And then you had a shorter secular bear market here. But I believe these correspond to generations. This was the baby boom, and now we have the millennial 401k. And what's interesting is you see these periods of tightness and then periods of wideness and sloppiness. And so that's really, in many ways, I think, the way to think about a bull market is that it has more of a period of kind of tightness, and tightness means you have accumulation. All right, let's see what we get if we have results from our scan. All right, it ran, and here's what we got. So let's look at these now. Look at things for, all right, so ERJ. I mean, this is a crazy Brazilian name. I don't know, but it's just pulling up these. Interesting. Fastly had a similar sort of pattern. So let's actually pull up this other chart here. We're going to go to MT swing. This chart, I'm going to copy this, bring it over to this window. You can see the 10 and the 50 on this one. It's faster than opening it up and having to edit all the moving averages. So basically, you can see that the yellow is my 10 and the 50 is the red. You have the crossover there on the second. So there's another series of signals. Interesting. Also, you have Yext was on the list, Taiwan Semi. So you have some of the similar sort of names on the list. But I wanted to just kind of show you these guys. The thing to me that was interesting was at this point was looking at some of these non-index runners. I had done some of these scans, and the ones that had kind of popped up were things like AI, and this is a name that people trade a lot. It's a very active sort of traded name, but this was one here that was, that had popped up for me that I wanted to mention. Someone's interested in doing more on Scanner. Yeah, I mean, Scanner is one of these things I feel it's kind of like, oh no, it's like Fortran or something. It's a pain to use, but it's powerful. It's one of these things where the main thing I'd recommend, and most of the stuff I've learned from him, is to save scans. And I'll be honest, I'm struggling with the nomenclature of scans. I give them these exclamation points to put them at the top, but I honestly have started to more recently use I use the MySQL version. I know a little bit of MySQL coding, database work, and I use the MySQL version of a date, which is year, month, day, for and then leading zeros on both. And if you do that, it can allow you to kind of go back, and because what I often find is I create a scan, and then what I will do is I will automate it, which you can do by double clicking on it and going here to schedule, and then set it to run automatically, which I've done for a lot of my scans. The problem though is that then when that happens, you forget, oh, I remember I made a scan, and it's good to be able to go back and know when you created something. So my suggestion would be to basically just begin with your date. And then that's what I've done recently. You might want to begin with something like moving average scan or MACD scan. If you want to do it that way, um, I have found the date helps me to keep organized better. So, most of the other workspace we have, that's really all I wanted to talk about today. Most of the other workspaces here, I have not found as useful. I'm increasingly frustrated by breadth. Everyone talks about it, but it just has not been super meaningful. It's funny, we get the breadth. It's almost a contrary indicator. When you get the breadth, it's time to sell the rip. But that might be interesting too. I mean, maybe that's actually the signal. What is interesting is we saw more companies hitting 52-week highs here, going back to last week. And usually that is a signal of a market that is in a sort of healthier place. If you look here, when the COVID crash happened, once you start hitting new highs like this, the market tends to continue higher. It's interesting here. This was May of 2021. There was this ridiculous surge of new 52-week highs. And the reason is because the comparison back to the COVID crash meant that all these companies were suddenly above where they were a year prior. But what's interesting is once you start making new 52-week highs, historically, if you look at most history, it continues higher. And that is a lot of the history. I actually did something recently. I don't have time to get into it here. I did an analysis of after a golden cross, the 50-day goes above the 200-day, or the 100-day goes above the 200-day. Going back to the S&P's advent in the early 1960s, there's an 80% chance, depending on how you slice and dice it, there's between an 80 and 86% chance that you will be higher 12 months later. So, I'm sorry, maybe 6 months later. There's one that I actually have to go back and it's cumbersome to do this, but essentially when that cross occurs between the 50 and the 200, or the 100 and the 200 over the 6 to 12 month period, history suggests there's more moves to the upside. Maybe we can talk about that next week. I don't want to give the exact numbers, but I ran it different ways and I was able to show that. And I essentially used something like this here when I created a hypothetical, buying and selling strategy using strategies, and then going to data, strategy, performance report, and going back and actually seeing the percentages on it. Like this one is only 50% profitable trades, but the average winning trade is 4 times bigger than the average losing trade. So that's the sort of thing that would give you that sort of positive return. If you look here, for example, at the performance graph of this strategy, it has generated positive returns for a while now, going back to 2019 is when it really started working. This strategy, I've given this to you guys, is when the number of companies above the 20-day moving average exceeds the number of companies above the 50-day moving average, it has been a buy signal, a signal. And then when the cross under occurs, is to go to the sidelines. It doesn't work triggering a short, but it does work as taking profit. So that has been an interesting thing. And like I said, there was a cross right here, and that triggered a buy signal right here back the end of May. And that buy remains in effect and it remains profitable. You can actually see if you go to the data, strategy, performance. Remember, this is all hypothetical. This is not anything with real money, but this shows here there's an open position. Somewhere it says here, open position profit. Oh, here it is. I just saw it. Open position profit loss. So it shows here that this position is profitable. So that it began. So anyway, folks, great to talk to you. We'll be back same time next week. Hope everyone has a great day.